Hello, friends. Susan Axelrod here, the Confidence Coach. I am coming live to speak to you tonight about your money. I want to ask you a question. How is your financial health? And another question. How well do you know your money? I came to do this live because of this issue of the AARP magazine. It's the April and May issue. Yes, I get the issue. Yes, I'm old enough to get the AARP magazine. And generally, I glance through it to see if there's anything of interest. Usually there's an article or two. I also glance through it for my own inspiration because someday I aspire to write for the AARP magazine. In this issue, I came across an article with these big capital letters. How well do you know your money? And I read it and I dropped my head and went, that thing, that old thing. As a fundraiser, as a career fundraiser and philanthropy advisor, I learned that the topic of money is truly more intimate than sex. People will more likely speak with you about their sex lives than they will about their money and their financial lives. I'm not sure why this is, but I know it to be true. And so in my work as a confidence coach, often I bring up the topic of money, both with my women in the second half of life, also men, and also and especially with my young professionals whom I work with. And so as I do on my platform, I decided to show up here with you to say hello and ask you, how well do you know your money? At this time, I want to offer a disclaimer. I am not an accountant. I'm not a certified financial advisor. I'm not a financial professional. I am a confidence coach, someone who is willing to call you out on the things that are the most important to you in your life, things especially that are foundational so that you can live life more confidently and in a more well way. So I decided that I would share this article, which was written by Kimberly Langford, a former columnist at Kiplinger's Personal Finance, and the author of a book called Rescue Your Financial Life. I'm here today to bring your money back to top of mind. I'm here today to encourage you to look right at your money, to not shy away in fear, shame, or guilt, and to take your financial life into your control. So I scheduled this for up to a full half hour. I don't know how long it's going to take to go through this article with you, but I'm going to go through all 9 points of your financial health with you from this article. My goal here tonight is to spark your initiative to become more comfortable and more confident with your own finances, to risk and get the reward of looking at your own financial concerns and issues. So the first topic that she addresses is called cash flow. Cash flow is more money coming in than going out. This is something I speak with young professionals about, but I think all of us need to pay attention to this. In this day and age of so many hidden expenses, so many ways we can click and pay that we do not notate and that we often don't remember, we have a lot more money going out than is on the conscious mind, and sometimes that we pay attention to. So I want to ask you, do you know how much money comes into you monthly? And do you know how much money goes out from your accounts monthly? So she talks about adding up all your different sources of income If you're older, you might be getting Social Security. You might be already able to access your IRAs or other pension plans. If you're younger and you have a job, you may have one source of income, which is your job, your paycheck. You may have been lucky enough to receive an inheritance, all kinds of ways that money can come in. You might have a side hustle, etc. And so it says, are you a retiree tapping your investments for income as part of your cash flow? In that case, aim to keep your withdrawals under 4% of retirement savings per year to meet your spending needs. Under 4%, so that any amount earned on those investment accounts over and above 4% can be compounded back into savings to grow your accounts. So the questions I wrote down for myself that I want to share with you are, do you know all the sources of your income and investments? And do you truly know your expenses? Are you even aware and familiar with the basic costs of shelter, food, and healthcare versus discretionary spending? Go look at your Amazon bill after I'm done here and go into the orders, the recent orders, and look at your order history and see how much you're spending on Amazon alone for things that are not in your basic human needs. Okay, the next area she addresses is home wealth. The question is this. Her question is this. If you were to sell your home right now, how much cash would you walk away with? Coincidentally, recently, I purchased a home a year or more ago, and I bumped into my realtor in town. And I said to him, hey, if I were going to, I asked this very question, not having to do with this article. I hadn't read it yet. I said to him, if I were going to buy another house, how much value would I have in my house? And he said, let's get together and go over those numbers, and then we'll, work with other people as well, including a mortgage expert, etc. It says you may be counting on a home sale to supercharge your retirement savings, buy your next home, or pay for long-term care. But the amount you'd actually get when you sell may be different from the estimate you see online. Zillow and homes.com, any of those things, they're not exactly accurate information. It may give you an idea of something, but it has nothing to do. They don't know the changes you've made in your home or the changes that need to be made in your home, and how much you've paid against your mortgage. So it says subtract your to get an estimate of your home's value, speak with a realtor to get a good estimate, and then subtract your mortgage balance and any other housing debt you might have taken, a home equity loan, for example. And the result is your home equity. Of course, she also talks about the fact that there are costs in selling your home. So if you have a home, if you own a home and you're close to the end of, paying off your mortgage, and you think you're going to get all $500,000 in cash or whatever, don't assume this. This is called your home wealth, and we want to make sure that we understand what our home wealth is. Okay. The next section is called cash reserves. It says the question she asks is this: your water heater just died and it will be $1,500 to replace it. Are you panicking? Or in the case of someone I know, the plumbing needs to be replaced and it's going to be closer to $15,000. Are you panicking? The topic here is cash reserves. So how much do you have in your cash reserves for capital purposes when something like this happens, a crisis happens, or an emergency? The cash reserves are specifically earmarked for this purpose. It's not the 3 to 8 months worth of money that you have in savings for your living. If something happens, you get laid off, or whatever, something happens, you need to have money to live on, right? These are the kind of reserves. The question she says in the dive deeper section is, ask yourself, how much extra money do you have in the bank other than the working cash you need to get through a month. So having an understanding of what your cash reserves are now, really a deep understanding, is very important in case something happens. Buying a house, being a homeowner, shit happens. Sorry, but it does. I'm not talking about the choice you might make to renovate a kitchen. I'm talking about the need when your oven suddenly dies and you can't be without it. Everyone's emergency fund is going to look different, etc. The idea here is that you have money available without having to panic to pay for something that comes up. Okay? The next section is this: debt management. What is the highest interest rate you're paying on any debt? I hope this is interesting to you folks. I read through this article, I scoured through it, I highlighted, I have post-it notes on it, and I decided to come here to share it with you to help boost your personal confidence in the foundation of your life, which money is a part of. So, and I can see there's people on here, but I don't see your names because I'm using StreamYard. So thank you for joining me tonight. And I hope this is helpful. So I'll be able to see comments later if you make them, and I can answer any questions later. So this is called debt management. What is the highest interest rate you're paying on any debt? Of course, this has to do with your credit cards, right? There are some people who have to live on their credit cards. I knew someone who had racked up $80,000 in credit card debt and actually worked with a financial advisor meticulously over many years to get rid of that debt. I don't know what the average amount of debt is today, but it's a lot. And I'm wondering if this actually affects you. So it says the higher the interest rate on a loan or credit card, the bigger the benefit of paying it off as quickly as you can. So she talks about the fact that she says, it's a quote by this financial advisor, "It's amazing how often I'll see someone with a lot of money in the bank earning 2 or 3% and with a credit card debt or a home equity line of credit at 7 to 9%. And this person is saying, pay off the higher interest rate first. I feel like this is something you should know. I feel like this is common knowledge. I feel like a lot of people know that one in particular, but I have to be honest, it wouldn't be in this magazine article if it weren't a relevant piece of information today. That's how I look at this. So that's called debt management. And then I wrote a question mark of how much cash in the bank do you have? What's it for? And how much is earning? These are my questions to myself or for you. And the reason is, I remember a friend told me that they felt guilty about having $70,000 cash in the bank. And I was like, I don't see anything to feel guilty about. The question is, are you aware of basic financial principles that will support your confident life and really support your foundation? Okay, so how much money do you have in the bank? How much credit card debt do you have? Which interest is higher? And are you making sure to pay off your credit card debt? Okay, the next section is called family security. This says, if you get hit by a bus, how large an insurance payment will your survivors receive? And I wrote down questions. What is life insurance really for? How much do you need? How much are you paying for it? I've been through all of this recently. This is a very topic very close to me right now. And I really want to invite you, whichever spouse you are, whichever spouse or partner you are, who's saying, oh, my other takes care of that. I don't really want to hear that. I'm not okay with that. It's very important that you both know. One of my clients recently said to me, oh, we conquer and divide that. He takes care of the money. I take care of other things. I'm like, no, not allowed, not acceptable. So life insurance is a big part of most people's financial lives. They get life insurance early And then in some cases, as we get older, our kids get grown and gone, we may no longer need the types of policies that we had originally gotten. Do you know where your life insurance policy is? Take it out and call your friend who sells life insurance and ask them to review it with you. I'm sure you know someone who sells life insurance. Here is the dive deeper. Did you buy a 20 or 30-year term policy? Consult your copy of the policy to check the expiration date and other terms. You may need insurance beyond the original term if you have a special needs child, for example, or it may no longer be necessary for you, and you may be able to convert your term policy to a permanent one, et cetera, and so forth. I'm not here to talk to you in specific detail about life insurance, but I can tell you, I guess I want to say personally, that life insurance matters in your life. I'm getting emotional for personal reasons. I'm not going to share it here. This is not that type of life, but I just want to say to you, life insurance matters, and it also may no longer be necessary. So I'm not telling you to go get life insurance. I'm not telling you to sell your life insurance policy. I'm asking you to understand the subject matter category called family security. Okay? All right, moving on. The next section is tax management. Her question is this: when you saw your final income tax bill or refund this year, was the amount far different from what you expected? So this category is called tax management. Right away, as soon as we use the word taxes, most of us go like, oh, we have this, fight or flight, reaction and response to taxes. So the way that you live a more confident, well, and healthier life is to look straight at something. And that's why I'm doing this live with you today, or maybe you're watching the video replay at a later time. That's why I'm doing this. I'm coming here to you to invite you to answer the question, how is your financial health? Because your personal, physical, mental, emotional, and spiritual health is all significantly impacted by your financial health. So we're back on the tax management conversation. Keeping up with your tax situation throughout the year can help you avoid a big bill at tax time and possibly penalties, or a long wait for a refund when you could have used the money during the year if you had planned better from a tax perspective. So the dive deeper says owing money is a common hazard for people who have income in the form of freelance work, taxable investments, or withdrawals from a traditional IRA. So this is a really great conversation to have with your accountant, not at tax time, but way before tax time, like, now. And then in particular, I have been an independent contractor since the year 2001. And so we have to pay quarterly estimates, et cetera, and so forth. And more and more people are going into the gig economy. More and more people are setting up side hustles. More and more people are retiring from full-time jobs and, doing contract work. And you need to know how this affects your tax management, as she calls it. Okay, the next section is called retirement readiness. If you haven't claimed Social Security yet, how much will you get? And if you're married, what will the survivor receive monthly after the other spouse's death? So yes, you have to be spouses. This is called retirement readiness. Social Security may be your main source of guaranteed lifetime income in retirement, especially if you don't have a pension. And so she's suggesting that you sign up for my Social Security account on the Social Security Administration website. I've been on there for a very long time, and it's very easy to get on. It's very easy to sign up, and you'll get a lot of information to support your financial wealth and health, your financial wellness and health. Okay. It says, knowing these estimates now can help you better plan for retirement. Are you going to retire at 62, 67, 70, or whatever? All of these factors affect how much you'll be getting monthly in Social Security. Married couples should know that after one spouse dies, the other will receive one monthly benefit, not both, the higher of his or her current benefit and the survivor's benefit. So get onto the Social Security Administration website and see, become familiar with your Social Security picture. Okay. The next topic is investment risk. The question is this: if you have retirement savings, roughly what percentage of it is in stocks? And I wrote down the ratio of asset allocation to age. So one of the things that she talks about is the asset allocation, which is your risk tolerance, the asset allocation of stocks to bonds. Bonds are generally lower risk. Stocks are generally higher risk. And you need to know, A, your risk tolerance, and B, what's called the ratio of stocks and stock funds to bonds and bond funds in your portfolio. So generally, the ratio means that as we get older, we want to move into a more fixed, a lower risk portfolio to support our later years in a more steady way than being in the high risk category where it goes up and down or could go up and down, and we may not have the money that we need when we need it. And so it says your latest retirement account statements should have a table or pie chart showing you what your percentage of your holdings is in stocks and bonds, etc. So my question for you here is, do you receive, open, and read your account statements from the different retirement vehicles that you have? You may have a 403B, a 401k, you may have some kind of pension report from your place of business. You may have IRAs, you may have a traditional IRA, a Roth IRA. And what we don't want is to be overwhelmed. What we do want is to be organized. And so if you want, you can go old school and set up a 3-ring binder, get a 3-hole punch, and get the paper statements and get yourself organized by quarter. If you want, you can set up the whole thing in digital folders the same way. My question for you is, if you're receiving your accounts via email, are you opening them and looking at, if you are receiving account statements via email, are you opening them and looking at them? This is about your entire retirement and your investment earnings. And so the investment risk is about the asset allocation, but both of these topics are a little bit together of retirement readiness. Okay. But this also does apply to regular investments, not just retirement vehicles. Whatever investment accounts you have in your portfolio, do you ever go into your portfolio dashboard and look and see? Not every day, not every week, barely every quarter, maybe once a year, annual review, maybe twice a year, annual review. So you're really familiar with this information so that you're really in a healthy and well financial place. Ask yourself these questions. Okay, and now the last topic that she writes about is net worth. By the way, I want to let you know that I actually typed all this out, and I'm going to create a little handout on this, and I just typed it out in the chat, just the 9 topics. But I'm doing this because I want to, because I've worked with people from a philanthropy perspective. and their finances for more than 30 years, 35 years. And also because of my own circumstances, I've sort of been forced to really pay attention. Years before my husband and I ever thought about retiring, we started, I think it was like a 3 or 4 year process with our financial advisor to review all of the information. It doesn't have to happen suddenly. It doesn't have to happen quickly. My intention for coming here to speak with you today live is to encourage, motivate, inspire with love, not judgment, for you to look at your financial picture. The final category is net worth. The question she asks is this: you're a wonderful human being and you can't put a dollar value on that, but how much are you worth? Your net worth, simply put, how much you have minus how much you owe. This can be a guidepost on the roadmap to your future. It helps you get a sense of how many resources you have if you need to tap into them. And then the dive deeper is add up the value of all your savings, investments, property, and other assets, the big assets. And from that number, subtract your debts. Use the resulting figure, your net worth, as a jumping off point for some other questions. For example, what can you do to increase assets or decrease debts? What can you do to improve your net worth? If you end up facing a major expense, say long-term care or the illness of a child, where could you get money to pay for it, etc., and so on and so forth. So I want to thank you so much for joining me. I have several dozen people here with me. I appreciate your showing up. I'm really happy to be one person coming into your life right now, and for anyone else who's watching this video by replay, to ask you, how is your financial health? How well do you know your money? As a coach, I want to say that it's easy to kind of avoid all of this. It's easy to deny and pretend. And it's easiest of all to say he or she or they are taking care of that for me. And the they may be an individual, but the they may also be your financial advisor. I've been saying for many, many years, I've told my kids, no one cares about your money more than you. Believe me, no one cares about your money more than you. If you don't care that much about your money, then what does that say? I want to ask you to take your hands and put them on your heart and ask yourself the question, can I do this? Now, some of you may be older already. Most of my market is, some older people, and you may be in very good shape with all of this. This little tiny conversation I've been having with you may be a great review for you, and it may make you feel even more confident by saying, I'm good, I got it, I did it, I've done it, etc. So to you, I would like to say, please share this video if you want, or have this conversation with others, because I can tell you, your sister, your cousin, your colleague, your church member, your neighbor, they don't have it all together with their finances, including people who appear to have it all together, who appear to have resources, etc. Many, many, many people are actually living on credit cards today, or perhaps loans. And many, many people, if you go what I call under the surface, have so much fear and doubt and anxiety about all things related to money. So again, I'm a confidence coach. And so when I saw this article, I knew, and it was important enough to me that I committed to it. I picked a time and I promoted it in advance. And again, I have so many more people, hundreds of people now I see from my counter who have joined me. I want to say thank you so much. And I want to invite you to have this conversation with other people in a non-judgmental, loving, and supportive way. I'm using my Dear Future Self thesis here, brand, for this conversation, because if we were able to actually speak to our future selves, I want to ask you, what would you say to her, them, him, or her? What would you say? Would you say, I got it right? Or would you say, I'm so sorry, I got it wrong? All right, friends, that's it for today. Thank you so much for joining me. If you need help, support, or accountability looking at your finances, I'm not a financial advisor, but I am someone who can work with you in accountability to review your statements in confidence, and I don't have to see the information. I can just work with you in accountability for you to see the information so that we can get you to a place where you feel financially well and healthy. And the next time somebody asks you, how is your financial health? You can say, it's good. All right, friends, that's it for today. Take good care.